Hi, this is Randy Finney with the right side of the chart, and today is Thursday, December 8th, 2016. I had a member in the trading room ask me for some overhead resistance levels on GDX, and there's so many moving parts. As you guys know, when I trade GDX, I follow the charts of gold, silver, as well as GDX, also the US dollar, everything else that plays into it. I'm not going to do an extensive overview right now, but I do think there's enough that it warrants just, I'll try to keep this video, relatively brief, and I'm just going to run through different time frames on the big three: gold, silver, and GDX. Now I'll start out here in a monthly time frame, and when I go to a monthly time frame, I use the HUI because the HUI is a gold bugs index similar to GDX, as a miners in there, but the problem is GDX is an ETF, and ETFs are relatively new in the financial world, so you don't have a lot of history. You can go back here to 1996, I think it is, yeah, 1996 on the HUI, looking at this monthly chart. So here's the really big picture. Miners uptrend, rising wedge, breakdown. We all know the vicious bear market the miners have been in. And basically we had a divergent low down here. You can see it on the RSI, and a nice rally so far in 2016, and a pretty healthy correction so far, pullback. So bigger picture, what I'm looking at here on this chart is a couple things. I'm looking at, let me try to give you some screen draw tools here. A very nice resistance zone right here that we ran into. And this was highlighted, quite a bit on GDX and everything else. So you can see reactions from above and below back there, reactions from above and below here. And of course, that's where we failed on this most recent rally. Good news, if you're longer term bullish, a couple things I see on this chart that stand out. Now, may take a little while. As you guys know, my enthusiasm, I'm skewed to the bullish side at this point. I've been bearish and short most of the time, not most, but a good deal of the time down, I should say. But here we go. We have reactions here going back. What I'm focusing on is this support zone. It was resistance back here, support when tested from above. So a lot of reactions here, and here we are. We're just a little bit above there. So I could see a little bit of downside in the miners, but that is very solid support right there. Again, numerous reactions, and it is a zone, and we are looking once again at a monthly chart, so this is not an exact timing indicator here. One other potentially bullish thing here on this chart is I have a lot of different EMA pairs I'll use. On this monthly chart, I have a 20 and a 17. Sometimes you can use those as, the crossovers will, you see a bullish crossover between the two back here. The bearish and bullish crosses do a decent job. In other words, when the 20 EMA, the slower of the two, or I'm sorry, SMA, simple moving average, is above the 17, the trend is bearish, and when the faster one crosses over, which is a 17, and it's above, then the trend is bullish. So you can see that. But it also, the pair together looks like it does a good job of defining support. In other words, let me grab a little screen draw tool here. Okay, over here you can see, during the downtrend, for the most part, prices or the HUI remained below that pair. Then you had an uptrend, prices were above, a little whippy period there where it crossed below. That's the downside to any trend indicator, as during sideways or choppy consolidation periods, trend indicators, throw them out the window, they're useless. Then you had an uptrend, so you can see the point. Downtrend, prices are below. Uptrend, prices are above. Downtrend, prices are below. And here we are. So we're clearly above that level. Now we're testing it. And just like any other moving average pair, which defines trends, they also act as support or resistance when tested from above or below. So yeah, I'm throwing out some bullish and bearish things here. But overall, what I'm looking at here is triple or double, I should say, support levels. Both those EMA pairs, or simple moving average pairs, I'm sorry. I often use EMA pairs, but in this case, I'm using simple moving averages, and as well as the horizontal price support there. So that's the glass half full side. We also had a divergent low, at least on the RSI on the HUI, and again, monthly chart. But the downside, the negative here, or one negative, is this PPO. You guys know I like to use that as a trend indicator, or at least those of you who follow the site. I like to use the 9 EMA because that's the last of the two to cross. That's a signal line. And just about any time frame, just about any security, whether it's a stock market, an individual stock, tends to do a very good job at defining the overall trends. When the 9 EMA is below the 0 line, which is the dotted line, the trend is bearish, as you can see here. We had a crossover right about here, indicating the trend was bullish. It kept you long throughout most of the bull market. Like any monthly trend indicator, the farther you go out on time frames, whether it's a weekly, then you go out to the monthly charts, the slower those signals are going to come, and they're not going to get you in right at the top and right at the bottom, but you're going to have a lot fewer whipsaws. So again, this caught the bulk of the bull market, had you long here and short here, but here's the thing, that is still bearish, and you have also the PPO line curling down, looking to make a bearish cross, but more importantly, that signal line still below the 0 level by a pretty decent margin. So, there are a few out there, and I know they're in the rare minority, that make the case that the metals and the miners are in a much more, that this was just a bear market rally within a larger new secular bear market in the metals and miners. Possible. Just I'm throwing them both out there, guys. I see mixed signals here, but more importantly for now, support is support, and that's what you do. You start scaling in long here like I talked about. It's still not an official trade idea. I'm referring to GDX, but you just don't get married to the trade because you can argue both sides from the longer term charts right now. All right, now let's jump down to a weekly chart. We can go to GDX just to show you guys my point. Here's GDX. See right here, we can only go back to 2006 because I think that's when it first came out. So the monthly chart doesn't go back as far. However, that's fine for a weekly chart. I like to go back 10 years. And this was the story in GDX. You can see the bullish divergences at the lows, falling wedge pattern, breakout, and we ran into resistance. These levels were highlighted here, and GDX, we were short near the top. And now, bigger picture, what's happening here? This downtrend line. See this? This is a descending, broadening wedge pattern with this trend line and this one. I know I mentioned a few things. There are a lot of moving parts on this chart. You had this downtrend line here, the white one, forms a falling wedge with this one, and that certainly played out. But then this the same line that forms the bottom of the wedge with this downtrend line, which has numerous reactions going back here. Reaction, 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 reactions there, and reactions again. So point being, you have GDX at support on the weekly time frame. Actually, dual levels of support because you have this horizontal line here defined by this reaction, reactions from above and below back there, and reactions there. So there it is. There's the bullish case again, or at least the case to step in and buy. There's no arguing that the GDX is in a downtrend, a larger downtrend. Another potentially bullish sign is the 9 EMA. Works just as well here on the weekly chart. You can see it is now testing just about right at the 0 level. And again, I'm talking about the white line, not the PPO line, but the signal line, which is right about on the 0 line there. And again, you can see how well it's done. The trend was bearish until this, started being bearish at this point. So it got you short here, told you the trend was bearish until right here, and kept you long throughout this whole time period here. Finally crossed over bearish right there, and there was the top. You can see a little whipsaw where that white line peaked above the 0 line, but for the most part, if you exclude that whipsaw, it kept you short up until about this point right here. So a pretty effective trend indicator, guys. And it has been clearly bullish since this crossover here, and now we're back testing. So and you'll often note that although again there are sometimes some minor whipsaws where it breaks below, this level often acts as support or resistance when tested from above or below at that 9 EMA. So the bullish case will see GDX reverse here. You have both price support, you have the PPO, which is still in bearish territory, or the trend indicator is still bearish. I'm sorry, bullish until and unless crossed below that line, and that would really, you'd want to coincide that up with a solid break of this support level right here, because your next stop down here, I don't see a whole lot of resistance down to about the 17 area, guys, and that would also put that trend indicator back on bearish. So there it is, a case to step in and buy, which I've been making. I'm not, it's not a hard buy yet. It's not an official trade idea on the site. Like I said, I have been scaling in personally, and that was my recommended strategy to all, or to anyone who was interested, I should say. I put this up a few weeks ago, and we've had a couple opportunities. This is what I referred to a few weeks back as a buy scale-in zone for GDX. S1 through S2, meaning support 1, support 2. I have 2 support levels in close proximity, and that's the shaded area, so I call that a support zone. And we've had a couple tags of it already, so we've come down, kissed that level. That's where you want to start buying. You don't want to buy up here. It's a no man's land. You want to buy here all the way down to S2, but not below S2. Still some bullish divergences, potential to, or they're in place. They're actually confirmed bullish divergences on the weekly time frame of GDX. And let's just run down now to a 60-minute time frame. Now, if you want to know what I think is going to happen, and the reason I still haven't added this on as an official trade idea, and I might be wrong, but just looking at this chart, these divergences aren't really clean right now. What I mean by that is I pointed out, you can see here we made an equal low. This was a slightly higher low, but at this point, and I think I did point out a few weeks ago, we had bullish divergence. That was somewhat clean. What I mean by clean is I like to see separation. Now, if we come back down here again and we make a new low, just say right here. Let me draw it out for you, tell you what I'm talking about. Let's say we come down, GDX punches, makes a marginal new low. At that point, you're going to have divergence that could look like this. There's not a lot of clean separation. I like to see a clean 2 peaks and a trough between separation, kind of like this right here, this clean separation. This is sort of flatlining here, this MACD. So it is possible, because we already had that divergent low, that GDX could rally, break on through here and move back up. So that's why I have some exposure. But if I had to pick one or the two, I would slightly lean towards another thrust down, something like this. Let's draw it out here for you. You know, to see another thrust down, extend these lines here. Well, that one's already extended, okay. A thrust down to new lows, and which would put us in, remember we were just looking at that daily chart, the support zone, the buy zone, S1 to S2. That would put us down in there, maybe in the middle, maybe all the way down to S2, and then see a reversal from there. And that would put in some nice clean divergence. You could see then the MACD line coming down here, RSI, this trend indicator and all that. And that would make for a nice clean, sorry for all the purple color here, it's kind of busy, but divergent low. And again, that's only the 60 minutes. So go back to the daily chart. You can see it there, and it almost looks a little bit like flagging action. So that thrust down would wash out a lot of the last of the weak-handed longs that have held or tried to jump in here and catch a bottom, and maybe suck in a little more short interest and pave the way for a more lasting reversal. So and like I said, if this level goes, I don't see a whole lot all the way down to about 17, and that's a pretty long move, and that's why I would, you know, scale it up to but not below 19. You don't want to dig yourself in a hole. Stop set a little bit below there, maybe on a daily closing basis, depends on your, you know, where your average cost is and a lot of other stuff there. So let's look at the metals real quick here, and then we'll wrap up. GLD, I was on a daily chart. Let's just stay here on a daily chart. All right, let's just go through here. Let's start with these indicators down here. So you see barely made some positive divergence with the RSI making about an equal low. You can see from this peak to this peak versus prices making a much lower low. So that's pretty steep divergence on price with a roughly equal aligned. However, we don't have the divergence. I'm using a PPO here in lieu of a MACD just because of the big price swings that we've had in gold and GDX. I think it's working a little better to use that PPO in place of a MACD, which is pretty much its cousin. They work very similar. Potential bullish crossover here. Bullish crossovers are when the blue line moves above the white line or the MACD line above the signal line. There's a bullish crossover. So those are pretty good signals, although that hasn't occurred yet. And sometimes we come in, it looks like we're going to make a bullish cross like here or a bearish cross like here, and you get rejected. So these two lines can sometimes meet and then bounce. So don't Just because it looks poised to curl up doesn't mean it has. This may reject, come down. There's a little more support, a little lower on gold, about looks like 109.70 or so. I can't see the exact level here, but on this level. So there's a possibility again that I'm open to, but that works well. Let me get rid of all these with that whole scale in process that I talked about. So maybe a little more downside in gold. And then a reversal, and that would mesh well with that little more downside in GDX as well. Because like I said, if you want to get the call on GDX right, you just need to get the call on gold right, because ultimately the metals, or I should say the miners, will follow the metals. So there's GDX from the daily chart. Did we touch on the 60? Nope. I don't think we have. So here's that divergence like I talked about. It was somewhat clear right here, but now it's flattening out. And again, it's just something that I've noticed. Usually I like to see that clean separation. We may or may not get it. So far we had this descending price channel. There was that level I said a few weeks back we needed to take out. We still haven't taken it out, and that's one reason I haven't added gold on. That may or may not be the level that I've officially added gold or GDX as an official trade. But you know, there it is, a breakout above this channel, but prices have really not moved up impulsively. In fact, anything but. You can see they're drifting back. So it's just somewhat of a sign of non-confirmation on that breakout. And see, non-confirmation meaning A, we don't see an increase in volume, which you want to see on a breakout, and B, we don't see any follow-through price action. Prices are drifting down. So it was just a minor resistance level anyways, a minor channel here on the 60-minute chart. It only went on for a few weeks, so it's not anything huge. So one possibility that I could see, again, and it meshes with the GDX scenario, is maybe a little bit more downside in gold. And I just drew it out on the daily chart, but you'd see the same thing here. And then you'd have some nicer divergence and see a reversal, put in bullish divergence at some lower levels here before we move up on gold. So that's gold from a 60-minute. Let's see on the weekly, anything worth mentioning? Yeah, certainly. This is a downtrend line. This was really a descending price channel, slightly contracting price channel that we were watching for a long time on weekly gold, the gold weekly. It came right up top to this major support zone, broke out, and now we're almost back testing. Got a little more downside, and that also fits with a little more downside on the daily chart. Bullish divergences were in place during that breakout. We're on a weekly time frame, but with that EMA, there it is again, that 9 EMA I like to use as a trend indicator. Told you to get long here after this correction in gold. Told you to stay long with a little bit of a whipsaw right here. But although that was your sell signal, and this was a whipsaw, because you could say that either way. It was about equal highs there. And then it said from this point on that the trend was bearish in gold, as it was, as you can see from above. So it does a pretty good job. And at this point it said, okay, we broke the white line, moved above the zero line, and it confirmed a bullish trend. We're still there right now. We're just hanging on by the skin of our teeth here. And again, this is just, you know, there are whipsaws, so this wouldn't be an all or none buy or sell signal for me if that line crosses above or below zero. I just use it in conjunction with everything else. So what we're looking at, the bottom line here, is gold coming in to test a potential support level, which is a back test of this downtrend line. That's it. While the 9 EMA, or the signal line on the PPO, back tests that zero level because it's been bullish for a while. So okay, let's look at the other shiny metal. A lot of the components in GDX are also silver miners, or they pull both gold and silver out of the ground. Yes, there is a separate ETF, SIL, which is just focuses, you know, mainly on silver producers. But GDX, like I said, has a good deal of exposure, you know, because some of those companies pull both metals out of the ground. So here's silver. Weekly chart. We were on a weekly, so I'll stick with the weekly. There you had very nice, clean, bullish falling wedge, positive divergence, everything you like to see for a trend reversal. We had a breakout, an initial thrust, and we've come back in to about the level. We're currently testing the level of the breakout. So that in itself can be support, but more so, you see the red line here, how well, you know, not perfect, but it's done a pretty good job, that red line, of acting as support when tested from above during this period. And then once it broke, it was resistance when tested from below. Prices broke above, and there we are. So you have silver at long-term, again, weekly chart, at or near just above long-term support. You also have the PPO, which again has done a great job. Told you to get short or bearish here. barring this brief. And, you know, we had a pretty good rally there. But either way, for the most part, you can see it has been bearish throughout most of the bear market in silver, and it has been bullish throughout so far most of the at least rally, maybe early stage new bull market, or maybe just a counter trend balance in a longer term bear market. I favor this one, but I'm open to all possibilities, and we'll let the charts be our guide on that. So far, the evidence is there, and this is about as objective as it gets. If you're bullish and you want to buy gold and silver or GDX or recycle back in because you sold, you know, up here at the highs like you should have, the evidence was, I thought, overwhelming, you know, recently to get out of the miners when we had that last official short trade on the site. But now the RR risk reward favors going long here, even if we're wrong, even if this is some new super secular bear market in gold and silver, and this was just a counter trend bounce, or in other words, a bear market rally, then it's still objective. You buy here at support. You have a lot of indicators also at support, or several indicators as well as price. You know, glass half empty side, if you want to look at the bearish thing, well, we did have this uptrend line that would have been nice to see that hold. You can see how well defined it was, this blue uptrend line, and prices did bounce off of it once, but we broke below it. So that is like just mixed signals. That's all it is, guys. Mixed signals, but overall, that's not the end of the world that trend line was broken. Maybe a new trend line will develop from here if gold does hold off the support level, and this is our new uptrend line, and then the bull market resumes. So that's what we're looking at. Let's see if there's anything else. That was a weekly. Let's go down to a daily. And here's my daily chart of silver. I must have shared the same thing, probably within the trading room, can't recall, maybe on the front page. The support buy zone. So we've had one tag of it so far, and that proved to be a, you know, we kissed it once and went up. Now we had nice bullish divergence both on the PPO and on the RSI. So we had a divergent low in silver, and that's why you've seen a better bounce in silver than gold, because the chart looked better. And we ran up right, these were lines that I've had on this chart. We ran up to the uppermost, or at least at these three near term, they were resistance levels at the time we hit that level. And we're at the top one. This is pretty significant. If you go to the left here on this one, you can see all the reactions. We had a big gap right here. We had a very significant reaction low right there. Significant because we were in free fall mode. Kissed it, 2 candlestick wicks there, and then bounced up. And you just kind of go back and you can see all the reactions that have happened on that level, on or around that level. So here it is. We're at resistance, and it's certainly not an objective time to go long right here. This is your objective time to go long, down around just above support, down to but not below the bottom of that support zone, because if that goes, that's bearish. Technically, it's going to take out, it'll undo these divergences most likely that are in place. Maybe not, we'll see. This one might be extended. The RSI is pretty high right now. What I mean by that is we might be able to, we'll just have to watch. That's why I always say the charts are dynamic, and so is my analysis. Meaning dynamic, meaning they change throughout time. I can't tell you exactly where these indicators will be, because we don't know if prices are going to zigzag around for a while, or they're going to go straight down or straight up, and that will affect how these look in another month, 2-3 months out from now. But should silver have a pretty quick pullback here, let's say a sharp pullback, if I can get the right tool back, let's see, drawing tool, you know, sharp pullback, go down to that support zone, we might at least have the divergence here on the RSI intact, turn around, reverse, maybe possibly on the PPO, we'll see. It all depends on how quick it gets there. So there it is. The bullish case is still certainly intact, and again, bullish, bearish, who knows where it's going to go. All we can do in trading is enter at objective levels, not chase prices. I don't like to buy things in no man's land. No man's land is what I refer to as when a stock or an index is well between any support or resistance levels. I like to buy at support, sell when support's broken, or sell at resistance. So if we get a long entry here, and maybe silver just keeps going up, maybe the miners turn around and go up and don't give me another chance to buy at that support zone, then I'll have to figure out whether I want to add on. But what I was doing with my scaling, I'm talking long-term positions, positioning for the next move up, you know, my IRA and longer-term accounts. Swing trading, that's another story. I don't see a lot of swing trading ops right now in GDX, and that's why you haven't seen any official trade ideas for those. Why? Because the charts are kind of a mess. That's, you know, can't swing trade this. That's a sideways trading range. This was a possible entry. You had a downtrend line, an uptrend line here. It broke. There was a quick flush out move, but you know, for the last few weeks, we've just been grinding around, and gold is in GDX. They're trying to pick a direction, and I can tell you this: they're hanging in there pretty well considering what the dollar's done. And I do think the dollar is poised to reverse. I think the dollar is at the tail end of its rally and maybe over. Very little upside there. So the dollar comes back in, meaning corrects, then that will be bullish for both gold and GDX. So there's the charts. I think I hit on everything I needed to, and let's just wrap this up here. If you guys have any questions, by all means, just post them in the comments section below this video. This has been Randy Finney with the right side of the chart. And if you enjoyed the video, as always, if you give it a thumbs up on YouTube, that would help out. Thanks a lot.